Hi there, welcome to London Academy of Trading's weekly market insight. And this week we are bringing this insight from the trading floor as we are now currently open for students. Of course, we're observing social distancing and general COVID protocols, but you are welcome to attend live on-campus sessions here at the London Academy of Trading's trading floor in the City of London. The session today is actually going to be based around something called relative strength. Not the RSI indicator, but more the strength between assets and relationships. This week, predominantly, markets have been dollar driven on the back of US bonds, and now from yesterday to today, really, the positivity surrounding the US's recovery post Corona, essentially. Their COVID fund has been agreed, but more so, President Biden came out yesterday and said, was the effect that their COVID vaccine rollout is not just on target, but surpassing targets. Therefore, positivity around the dollar, around global markets, hugely increasing overnight. And what we want to cover today is how do we go about choosing if a dollar pair, what dollar pair? And if dollar against anything, whether it might be oil, gold, yen, euro, how do we go about doing so? And of course, technical analysis and fundamentals are very important, but there is something called relative strength between currencies and general assets. That's worth taking a look at. That's what we're going to investigate today. One of the big reasons that people tend to like to trade, especially Forex pairs, most volume in financial markets on a daily basis is through the Forex markets, more than all the other markets combined. And one of the big reasons is if you take something like an Apple stock, Apple, I believe, is trading at around about 120, 122, something like that. Yep. So if we say something like $122 a share at the moment, that's where we're trading. Just going to pop it in black. Now, for Apple shares to increase, generally, we're looking for Apple to do well in terms of profits, sales, so on and so forth, acquisitions, whatever it might be. Yes, the sector as well in general, but it's generally more succinct to Apple itself. So to simplify, that is very much simplified, but if Apple does well, generally we see the value of Apple shares go up. And if that's in red, I'll just change that over, something like that. And then of course, if Apple does poorly, poor sales, new iPhone poorly received, profits, so on and so forth, lower than expected, then generally you'll see Apple move down. One of the big reasons that people like to trade Forex pairs is that there is increased volatility. Now, volatility does provide us opportunities to make money, but it must be stressed that increased volatility also provides opportunity to lose money. Okay, so of course, risk management systems and a systematic approach to markets is just certainly required. Even though you see big moves, you certainly don't just jump in. Volatility is good, but it can also be dangerous. But within the Forex market, if we take something like a euro dollar, which is trading at 119.15 at the moment, for this to go up, I mean, essentially what that means, by the way, those of you that are new, 1 euro yields $1.1915. Okay, always one of the base equals how many of the term. That's what the number really signifies. Now, if the euro were to get stronger off its own accord, if euros, I don't know, Christine Lagarde, central banker, head of central bank for the Eurozone, if she came out and strengthened euro through her monetary policy, we will see euro dollar go up. Because essentially my 1 euro, same 1 euro is now heavier, it's stronger, it can yield more dollars, therefore this value goes up. Oppositely, if euro goes down, if it gets weaker, then euro dollar as a whole will do something like this and move down. I'll get less dollars for that same euro. Now, that's just a euro move. If the dollar were to change in terms of strength or weakness, if it were to get weaker, let's say, then my €1 will get me more US dollars if the dollar is weaker. Therefore, euro dollar moves up. Then if my dollar were to strengthen of its own accord, Jerome Powell hikes interest rates, something like this, generally hawkish sentiment will strengthen a currency, I'm going to get less dollars for my single euro. Therefore, euro dollar will do something like this. Of course, if both euro and dollar strengthen at the same rate, at the same amount, then the difference between them doesn't change. And that's when you observe a sideways market. And similarly, if both of them were to weaken at the same rate, again, no change, sideways market. Now, here's where it gets interesting. Already we can see there are more opportunities for market volatility in Forex market than clearly in the stocks. But what's interesting here is now, if we had a situation where euros got strong at the same time as dollars getting weak. This arrow is strong euro, this arrow is weak dollar. If we get strong euro as well as weak dollar, then we're looking at something like this for a move. And the opposite of that, of course, if we get a weak euro, signified by this arrow, and a strong dollar at the same time, signified by this arrow, quite simply, you're left with something like so. So opportunity, huge, really, in the Forex market. But as I said, opportunity, volatility, or volatility breeds opportunity, but that's to make, but also to lose. So risk management, confirmations, an actual systematic approach still obviously very, very important. Now the question arises that if you find yourself with a strong or weak dollar and a market that is dollar driven, which is what we're finding at the moment, you would like to choose the most suitable pair to trade, asset to trade with dollars. Now this is what's interesting because you might initially think something like cable, okay, sterling against dollar known as cable. If we have a look actually the start of this week, throughout the start of this week, and to some extent towards the end of the week, but generally the start of this week, just going to take this screen away here, we can see I have euro dollar and I have cable. First line on both signifies roughly the start of the week, and then the second line signifies the start of yesterday. Okay, you can see here clearly we're looking at euros against dollars and it's been going up. Therefore, we know that euros have been stronger than dollars. Similarly here, pounds against the dollar been going up, therefore we know that pounds are stronger than dollars. I then got a chart on the far right here, which shows euros against pounds. It's pretty much sideways. So what we can decipher from all of that is that throughout the start of this week, dollars were weaker than euros and pounds. That's all the information we have there at the moment. Okay, pounds and euros pretty similar, dollars the weakest. Okay. Now the idea is if I don't want to trade euros against dollars or pounds against dollars because reasonably similar, I might want to see something that might have a bit more of a move against the dollar. And generally what we've seen towards the latter half of this week was optimism. And generally with optimism, US optimism, we're seeing dollar strengthening. And that actually happened round about early morning yesterday. Okay, early morning of yesterday, you can see this arrow here. Now, what you do note here on Eurodollar and cable is that they still went up. So what we had there were dollars strengthening, but euros and pounds were still strong in their own right. Therefore, we didn't see the turn until, as you can clearly see here, early doors this morning. Okay. However, if we have a look at something like a yen, What I wanted to have a look at was throughout the week, and then more so from early yesterday, what did euros look like against yen? What did euros look like against yen? And here you can clearly see euros were stronger than yens. Here we had pounds stronger than euros. Okay, forget that last bar. Pounds stronger than euros. Euros were stronger than yens. And dollars, towards the end, becoming stronger than everything. So what you end up with really, by doing your relative strength analysis, what you'd end up with is something like this. If certainly overnight we saw something like sterling was stronger than euros because we saw euro sterling going down. We saw that euros were stronger than the Japanese yen because we saw euro yen going up. Yeah, remember that's here in the top corner, euro yen going up, so euros are stronger than yens. But then due to President Biden's speech about the vaccine rollout, dollars have then seemed to be stronger than everything, which puts us here. And therefore, what that really means is dollars are stronger than pounds, are stronger than euros, which are stronger than yens. What that generally means is that dollars should be much, much, much stronger than yens. Okay, yen known as a safe haven asset if the world is getting good. If there's optimism globally, you would expect the Japanese yen to weaken. Expect the Japanese yen to weaken, you'd expect such assets like gold to weaken. And gold is again priced in dollars. So what we're looking at here are bigger moves in dollar yen and that of gold. And if we're looking at dollars being really strong and yens being weak, we're looking at dollar yens going up, up, and gold against the dollar going down, down. And that is clearly represented here in these two middle charts. If you have a little look from early of yesterday, here we have dollars slightly stronger than pounds, hence cables going down at that rate. Here we have dollars stronger than euros, and you can see the gradient is steeper. The gradient is steeper because we can see from this bottom right chart that pounds were stronger than euros. So if pounds are stronger than euros and dollars were stronger than pounds, we get that. And if dollars are stronger than euros, we get this also, steeper move. But what's interesting here now is that of gold and yen, because what we really had there was not just the all-around global dollar strength, but the yen weakness and gold weakness on the back of positive sentiment regarding COVID globally. And therefore, you can see here the moves, the bigger moves to have had would have been in dollar yen long and gold short. It's a little bit of a tricky one to follow. We're going to do some follow-up sessions on that. Maybe next week's insights, we can do a follow-up and see how they continue throughout the following week. But there's a little bit of insight into relative strength amongst assets. So rather than just trading an individual asset, something like an Apple, we're looking at coupling strongs against weaks in order to get greater moves. Other than that, well, let's have a quick look at the week ahead. Just going to pop ourselves onto this calendar here. Quick look at the week ahead in terms of data. Major thing to note from this week really in terms of data was ECB held rates as predicted. And then throughout next week, you can see that there raft of minor data really. It's come out as minor, but retail sales, unemployment rate in China, they are reasonably large figures. Industrial production, they are large figures, but they've come out as yellow. So can't imagine too much on the back of that. Throughout the week, bit of retail sales out of the US, as you can clearly see here. Inflation data out of Canada, and Wednesday we have the all-important US interest rate decision. Now, of course, again, cut or hike, highly unlikely. However, press conference to follow will be rather relevant. Some Aussie employment data early Thursday, and then we've got lunchtime Thursday, the Bank of England come to the party with regards to interest rates as well. Again, cut or hike, highly unlikely, but it will be interesting to see what the follow-up press conference would be like there. Following on to Friday, minor data really. So can't imagine too much going on really with regards to big market moves. Again, Bank of Japan with their rate decision, but unchanged expected across the board really. Okay, right everyone, I'm just going to wish you a wonderful weekend. Do stay safe, take care of yourselves, and do join us next week for LAT Markets Insights. Take care.